All right, Chapter 6, Merchandise Inventory. It's a little slow to respond. Here we go. Okay, so what we're really talking about in this chapter is, in the last chapter, we talked about when we made a sale or made a purchase. When we made a sale, we had cost of goods sold, and the number was just given to you. So what we're really talking about in this one is how to get that number, and there's several different methods to use. And so we're going to discuss 4 different methods for accounting for our inventory. And we have some basic principles that need to apply. So one is consistency. So it's not that you're not allowed to switch methods, and in fact you can use different methods for different types of inventory, but you need to be consistent. You can't switch every month. And at the very end, when we compare all 4 methods, you'll see there's kind of advantages and disadvantages of both. But you can't just flip-flop every month or every week according to how that fits. So we need to be consistent. There's also the principle of disclosure, which means I need to, on my financial statements, I need to explain what I have done to the point where somebody else could figure out how I got these numbers. And if you look at the financial statements that are out there online, available to anybody for the big publicly traded companies, then you'll see there'll be pages and pages of explanations on how they did their inventory, how they did their depreciation, all this kind of stuff. So you have to disclose that. There's another principle called materiality, which says that these principles really only apply to things of substantial value. So if I'm American Eagle, my jeans and my clothes is my big inventory. I have to do it there. It doesn't mean I have to apply this to the sticky notes in the office or things like that. So the small things that don't really apply. Now, what's considered substantial, that's a little bit subjective, but the idea is I don't have to apply. Like maybe I'm not applying this to the hangers that I put the stuff on or something like that, because that's not a significant part of my inventory. The last principle is conservatism, which means I pretty much always take the worst case scenario. I need to be conservative in my estimates so that I'm not overestimating or being misleading in the numbers that I have reported for my inventory or for my my cost of goods sold. And we'll show the impact of those a little bit later. I also need to have controls in place. Inventory is a big asset for a merchandiser, often probably the biggest one. So you need to protect your inventory the same way you would protect your cash, for example. And in Chapter 8, we're going to talk about some more controls in here. But that includes having documentation to follow up with this. It has for your purchases, for your sales, having things like that, protecting your inventory from damage or theft, or it might just be proper training so that stuff doesn't get damaged. But having controls in place to protect us in the process, and we will talk about that more in Chapter 8. So, determining the merchandise inventory cost. So what we're really answering here is, how did I get that cost of goods sold number that I used in Chapter 5? There are 4 different methods we're going to talk about. One is called specific identification. One is called first in, first out, which we generally refer to as FIFO. Then we've got last in, first out, which is called LIFO. And then we've got weighted average. We're going to go through all 4 of these. We're going to have a couple examples that we do in all 4 of these methods. Basically, I like to picture this. We have these little charts that we use in this chapter, but I like to actually picture it. So here's my stock room, and these are shelves in my stock room, okay? And so let's say I purchased these first, okay, and then these second, and then these third. So these are my newest ones, my newest purchases. and these are my oldest purchases back here, the ones that have been sitting here the longest. And let's say I've got, items sitting on each of these shelves. I don't know what these are, but it doesn't really matter. And then I've got things sitting on this shelf like this. And then I've got things sitting on shelf C, okay, my newer purchases. Each time I make a new purchase, I put it on a new shelf. If I'm doing specific identification, let's color code this and see if that helps. So specific identification, these are all different, let's say they're different models of something that I'm selling. And so I go in and I say, okay, I want this one, and I want 2 of these, and then I want 1 of these. And so I know specifically each item, so if I have large inventory or something like that, I know specifically which one it is, and I'm taking it that way. And so I pick specifically, and I know how much each one costs me. If I'm using FIFO, I take the oldest ones first. So I pull from this shelf, and once this shelf is empty, then I move to this shelf, and then once shelf B is empty, I move to shelf C. So I pull left to right if I'm picturing it vertically like this. If I'm using LIFO, I pull these guys first, and once this shelf is empty, I move to shelf B. So I pull the newest ones first, and when that shelf is empty, I move to the next newest, and then I pull the oldest ones last. So this will make a little more sense when we go, but and then weighted average, I don't even have different shelves. I just throw them all on one shelf, and so we'll talk about that later. But with first in, first out, I start with the oldest ones first. When this group is empty, I've used all those, I go to the next group, and then I go to the next group. With LIFO, I take the newest ones first, and when shelf C is empty, I go to the next newest one, and then the next newest one, and I work backwards. So I'm going to, when we do these, draw these little shelves in here. It helps me visualize it. If it doesn't help you, you don't have to do it that way. If the chart makes sense the way it is, that's good for you. So, all right, so specific identification is first, and this is what I use when you are able to identify costs with each specific item in your inventory. So this is generally like, let's say you're selling cars, okay? Each item in your inventory has a specific vehicle identification number, and you can look that up and you know exactly how much you paid for that car. Or jewelry, or real estate. Anything custom made. You're going to know exactly how much you spent for that and how much money you put into that or how much you paid for that. So if I'm doing this specific identification, again, I know when I pull that item how much it cost me, and so I don't have to kind of estimate or like I'm going to do in the other ones. So this is the little chart that we use in here, and so this is when I make a purchase. So when I buy something, that black line is driving me crazy. When I buy something, it goes into this column here. And so I can see on August 5th, I purchased 4 units. Each one cost me $360, so the total cost me was $1,440. When I make a sale, when I sell something, it goes in here. And so I sold 4 units. This is how I got that cost of goods sold number that went on the journal entry. And then this keeps a running total of what I still have. So in this example here, I'm going to kind of walk you through this, and I'm going to create these little shelves. So I start out with shelf A. These are things that cost $350 each, okay? And I've got 2 units. So, and this is the example in your book, so you can follow along with that one too if you want. So I have 2 units that cost me $350 each. That's the first thing that I started with. Then on the 5th, I made a purchase. So I have a new purchase, so I'm going to put those on a new shelf. So shelf B will be things that cost me $360. And I have 4 of those. So when you have a transaction, it's either going to be a buy or a sell. It's not going to be both. But you're always going to do this last one, this running total of what I have. And so now, what do I have? I have 2 things on shelf A, which are the things that cost me $350, and I have 4 things on shelf B, which are the things that cost me $360. So what you can see I did, I carried these guys down because I still have those, and then here's my new one, I added that. Now, this is specific identification. So when it was time for sale, I pulled 1 thing here from shelf A, and I pulled 3 things from shelf B. So I pulled 1 from here, and I pulled 3 from here. I'm looking for specific things. So I have 1 left on A, and I have 1 left on shelf B. So the cost of goods sold is 1 unit from the 350 group and 3 units from the 360 group. So you put those together, and you got 1430. Then you say, what's left? I have 1 unit from shelf A, and I have 1 unit left on shelf B. So this is the total I have left in inventory. Then I made another purchase on the 26th. So another purchase, these things cost me $380. So $380, and I purchased 12 of them. So I have 12 things here. So now again, we say we keep what's left. Well, I can see that I've got 1 unit left on, I don't want to make a minus sign. I've got 1 unit left here on A, 1 on B, and then the 12 new ones. So I take what I had here after last one, I carry those down. So here's shelf A, here's shelf B, and then here's my new purchase, shelf C. So this is showing me what I have here. So it's the same thing. Again, if you like the chart, just remember to carry down what you still have and then add your new purchase. Then I made another sale. I took 1 unit from shelf A, those are the 350, and 9 from the group C, the things that cost 380. So I took 1 of these, so that shelf is empty, and I took 9 of these, so I have 3 left on that group. So the cost of goods sold is the 1 times 350 plus the 9 times 380. So for a total of $37.70. That's the amount that I would use for that sale on the cost of goods sold. What's left? 1 from group B, that's right here, and 3 from group C, that's right here. So, oops, that does not help. And shelf A is empty. So what's left is a total of 1,500. That's how the chart works. And then at the end, the totals, I sum these up. So 4 plus 12, 16 is my total purchases. The 1,440 plus the 4,560, $6,000 in purchases. And this part, the purchases, will be the same regardless of which method we use. Also, regardless of, and we got the same thing here, I sold a total of 14 units. That's going to be the same no matter which method I use, but the amount in the cost of goods sold is what's going to change. And then, so for these guys, I sum, right? This is the sum of everything that's happened that month, and this is the sum of everything that happened that month. However, since I've been keeping a running total, the inventory on hand is just going to sum whatever was here after the last transaction. So I have 4 units, and that's going to be the same no matter which method I use, and $1,500. And again, I'm just bringing down what I had after the last transaction. So this is the example in your book, and so you can follow along with that. I'm going to use that to show you each method, and then in the demo problems we have one for each method. We're going to take the same example here and use it for each method. So really, once the chart starts clicking for you, this is really not that hard, and it's much easier the more you do it. So after you do a couple, you're like, oh, okay, now I got it. And once you got it for one method, you should be able to do it for all the methods. So we can see that we started with 25 bikes that cost me $36 each. Then on the 16th, I made a purchase, 35 bikes at $60 each. And then on the 31st, I sold 33 bikes for $105 each. This $105 is not needed for the chart. The chart is just all about cost. This is what I sold it for. So I need it for the journal entry, which it asked me to do, but I don't need it for the chart. So not needed for chart. What I sold it for doesn't show up. The chart is just about the cost. So we'll make a little chart, my date, my purchases, my cost of goods sold, and then my ending inventory. So purchases, cost of goods sold. So on 7/1, I started with 25 bikes at $36 each. So 25 bikes, $36 each, means I have $900 in inventory. Oops, not 9,000. So if I want to look at it this way, here's shelf A, which are things that cost $36, and I've got 25 of those. Stop that. Then on the 16th, I made a purchase. So that's going to go in this column. I bought 35 bikes, and each of these cost me $60. So that's a total of $2,100. And that's dollars right there. So it's a new purchase, so I'm going to put them on a new shelf, and these are things that cost me $60 each. And I bought 35 of those. So what we've got on our inventory, we carry down the 25 that we had, and then we add our new purchase. Or we say the 25 from shelf A and the 35 that are on shelf B. So 25 times 36 plus the 35 that each cost me $60. So I've got 900 and I've got 2,100. So I've got a total of 3,000 in inventory, but I want to keep them on the different shelves. Then on the 31st, I made a sale, and it says I sold 33 bikes, and they're telling me that 20 of them came from shelf A, and 13 of them came from shelf B. So I'm going to pull 20 from here, so I'll have 5 left, and I'm pulling 13 from here, so I'll have 22 left. Okay? So the cost of goods sold will look like this. 20 bikes that each cost me 36, and 13 bikes that each cost me $60. So the cost of goods sold will be 20 times 36 is 720, 13 times 60 is, that's driving me crazy, 780. So the total cost of goods sold for this transaction is $1,500. And then we say what's left. All right, so here I started with 25, and I took 20 from that group. So I have 5 left from the $36 group, which is this 5 right here. And then I had 35, and I sold 13 of those, so I have 22 left from the $60 group, which is this 22 right here on shelf B. So 5 times 36 is 180, and 22 times 60 is 1320. So then I do my totals. I had one purchase, so that's $35, or 35 units, and $2,100. I had one sale, so this is a total of 33 units. The cost of goods sold was $1,500. And what's left, I have 27 left, and I just add these two together, and that is $1,500. That's what's left at the end. So I'll do the same problem with all 4 methods, and I'll always have, this will always look the same, the purchases. I'll always have 33 units left, sold, and I'll always have 27 units left. But these numbers right here, the cost of goods sold and the ending inventory, is what's going to change depending on the method I use. So then it asked me to do the journal entry. And so this is from Chapter 5, right? This is exactly what we did in Chapter 5. So the purchase on 7/16, when I make a purchase, I debit merchandise inventory, and I did it on account, so I credit accounts payable. And that is for this amount right here, $2,100. That's my purchase, which is the 35 bikes at $60 each. That's $2,100. Then I make my sale on the 31st. So when I make a sale on account, I debit accounts receivable and I credit sales revenue. That's right here, the 33 bikes at $105 each. And it means I sold them for $34.65. So debit accounts receivable $34.65, credit sales revenue $34.65. Then the second part of that transaction, I debit cost of goods sold and I credit merchandise inventory, and that is the amount that I calculated right here. That's the $1,500. So debit cost of goods sold $1,500, credit merchandise inventory $1,500. They'll ask me to do this same journal entry for every single problem. This will always be the same, this will always be the same, and this will be the same. I just change the amount for each one. And so I'm not going to do that for each one, just to kind of try to keep this video length down a little bit. But it'll look the same for every single one. I'm just changing this amount right here depending on the method I use. Everything else on the journal entry stays the same. Okay, let's talk about FIFO now. So FIFO is first in, first out. The first one's in and the first one's sold, which means I sell my oldest ones first. So my cost of goods sold number is based on the oldest items in my inventory. Now generally prices are going up, inflation and all that. So if cost of goods sold is based on the oldest items, that is generally a little bit lower. And my ending inventory in merchandise inventory is going to be based on my newest items. The things that I'm showing are left are my newest items, and so that's generally going to be a little bit higher. Now, a lot of people like this because that is actually closer to the replacement value of the inventory. So when I restock my inventory, this is going to be a little bit closer, which is good. If you picture, you go to the store and you buy milk, right? They load from the back of the cooler, so the stuff in the front is the oldest stuff, the stuff that's been here longest. And so when you pull from the front, you're pulling the oldest ones, and the newer ones are in the back. So that is that's FIFO right there. And so if we look at our shelves, A, B, C, this being the oldest, and this being the newest, we pull from this shelf first, and then when that one's empty, I go to the next one, and when that one's empty, I go to the next one. So if these are my shelves like this. And so I pull left to right, newest, oldest stuff first. Once that's all gone, I go to the next one. Once that's all gone, I go to the next one. And I work that way. This is an accounting method, so this doesn't actually have to physically match what you're doing in your inventory. This is how I calculate that cost of goods sold, that merchandise inventory number. It doesn't necessarily mean that that's what I'm doing. So for instance, let's say it's the grocery store and they do FIFO in there. It doesn't mean if you reach to the back of the milk carton to get the newer stuff that an alarm's going to go off and they're going to say, you can't do that because we sell the oldest first. So it doesn't always physically match the flow, but we need a method to account for it, and we need to be consistent. So that's what we pick. To me, it's easy to picture that that's how the stuff is actually going. It's easier for me to conceptualize that way. So here is the same problem that we did before, but now we're going to use FIFO. So I'm going to start here with shelf A. That's things that cost $3.50, and I started with 2 units on that. Then I made a purchase. So I'm going to put those on a new shelf. Those are things that cost $3.60, and I have 4 of those. So the first 2 things here are the same. What's left? I have 2 units on shelf A, and I have 4 units on shelf B right here. So I carried this one down and then added my new one. That's the same no matter which unit I use. Now on the sale, right? So here's my sale. I sold 4 units, but what I'm going to do is not pick specific ones. So I start from the left and I move to the right. So I go to my oldest stuff first. I clean that shelf off till that's empty. All right. So that's these 2 units at $3.50 each. That's shelf A. But then in order to make my sale, I need 2 more. So then I move over here to shelf B and I take 2 from that shelf, and that means I have 2 left. So that's my shelf B items. So that's the cost of goods sold now. It's still 4 units, but the cost of goods sold was $1,500 and now it's $1,420. What do I have left? I have 2 units here on shelf B. Shelf A is empty, right? It's empty. And I have 2 units left of things that cost me $360. So $720 is my units. The purchase is going to look the same. So I have a new purchase, so I'm going to put those on a new shelf. These are things that cost me $380, and I have 12 of those. So now I bring this guy down and add my new one. So I have shelf B here and shelf C. 2 items on shelf B, that's this, and 12 on shelf C. So here's my total inventory left. So now it's time to make another sale, and I'm selling 10 units total. So shelf A is empty, so I move to shelf B. I take those 2 items, so now that one's empty, and I need 8 more to make up my sale. So I take those here from shelf C, because the other 2 are empty, and so now I have 4 units left. So here's my sale, 2 units from shelf B and 8 units from shelf C. The total is $37.60. And then I have 4 units left. They're all here on shelf C, so that's $15.20. So the total is still 16 units and $6,000. That is the same. I'm still selling 14 units, but my cost of goods sold has changed. On the other one, it was $5,200 right here, the $5,200, and now it is $5,180. So I can see that my cost of goods sold has gone down. I still have 4 units left, and the ending inventory is now $1,520. I think it was $1,500 before. So if we do the same problem here with the bikes, but we use FIFO, again, it starts out the same. So on 7/1, so let's see, here's the date. Purchases. I knew you were going to do that. Cost of goods sold, and then my ending inventory. Lawnmowers have started outside. I'm hoping you can't really hear that. And so, stop that. So I start with 25 units at $36 each. So 25 units that each cost me $36 means I have 900 in inventory. So I'll put those on shelf A. Shelf A is things that cost me $36, and I have 25 of those. On 7/16, I made a purchase, right? I purchased 35 bikes that cost me $600 each. So 35 bikes, they each cost $60, so that's $2,100. So new purchase, new shelf. These are things that cost me $60, and I have 35 of them. So what's left? I carry these guys down. These guys are still here. The 25 units from shelf A, and then my new purchase, shelf B, 35 units. Each of those cost me $60 for $2,100. Then on the 31st, I make a purchase. On 7/31, I make a sale, sorry. So I'm going to put that here in the middle column. I sold 33 bikes. So what I do is I start with shelf A, right? And I take as many as I can from that. So I'm going to take 25 units from shelf A. So 25 units that cost me $36 each. And then in order to make up my sale, so that shelf is now empty, I need 8 more in order to make up this order. So I'm going to take 8 from the $60 group. So that leaves me with 27 left here, right? So that leaves me with 27 left from the $60 group, shelf B. So 25 times 36 is 900, and 8 times 60 is 480. So the total cost of goods sold here is $1,380. And what's left? 27 items at $60 each, so that's $16.20. So when I do my totals, I'm still buying 35 items for a total cost of $2,100. I'm still selling 33 items, but now the cost of goods sold is $13.80. I still have 27 items left, but the value of what's left is now $16.20. And if we go back to our first chart, we can see here that we had $1,500 and $1,500 on that one. And now I've got, this is down, right, to $13.80, and this is up to $16.20. And then the journal entry would look exactly the same as this one, except I would change that cost of goods sold number, this one right here, I would change that cost of goods sold number to the $13.80 cost of goods sold for this purchase right here. All right, so I think I'm going to stop this here and then come back and do LIFO and weighted average for you in another one, so this isn't too long.